Hi, my name is Chan Seaton. I'm the Chief Learning Officer here at Big Skyway. And for today's little learning nugget, I want to talk to you about cash flow statements. I think it's very important for business owners, leaders, managers to have that financial acumen and be able to read their three financial statements. One is the balance sheet. That's a snapshot of your financial condition at one point in time. It's looking at assets, liabilities, and net worth. Two, your income statement. That's a historical record of profit and loss over some period of time, right? I can look at an income statement today over the past 12 months as an example. And then cash flow statement is looking at over some period of time, the movement of cash in and out of the organization. And quite typically, it's broken into three different activities: operating activities, investment activities, and financing activities. And a cash flow statement can look different for different industries. We're a service industry. It's going to look considerably different than a manufacturing industry. And if you're a startup, that's going to look a lot different than a mature organization. So things to think about. But operating activities is that cash inflow and outflow of the actual business operating. It's really the cash flow engine of the organization. And on average, we'd expect that number to be positive over time. Investment activities is movement of cash in and out of the organization to fund and sell capital assets. So if I go invest $10,000 in a new pickup, that's going to be cash out. If I sell a different pickup, that's going to be cash inflow. But any kind of capital asset cash movement is going to show up there. And financing is that inflow and outflow of how that's funded. It can be debt, it can be equity, it can be payment of dividends, it can be bank payments. So here's where you see your principal and interest payments on debt, for example. Okay, so those are those three activities. And this helps you really understand why is it that sometimes I don't have much cash in the company, but my income statement looks great? Why do I show profit, but I don't have much cash? And this really helps explain that. One reason could be up here in operating is inventory. If your company buys a lot of inventory, well, that's cash leaving the organization, and that doesn't show up in your income statement until you expend it, until you use it, and it's cost of goods sold. It could be account payables and receivables. What if I'm really slow to collect my receivables, but I'm really fast to collect my payables? That's going to be a cash suck because my income statement will already have recorded that as revenue and as an expense. Also, funding, using working capital to fund long-term asset investments, right? I'm using current cash to do that. Okay, another reason why I might not have much cash in the organization, but I show profit is down here with financing. If I've got a lot of debt, if I'm a pretty leveraged organization, all those principal and interest payments leaving the organization, well, that doesn't show up in my income statement. The interest does, but the principal doesn't. Depreciation does. So that explains where all that cash is going. And then here's probably the most common is where people use their organization as a piggy bank, right? So, boy, it'd sure be nice to buy that boat or redo the deck. You're paying yourself some kind of salary, but you're pulling cash out of the organization to help fund those kind of fun things. And that's, of course, not all, it's not going to show up on the income statement either. So it really explains another version of what's happening in the organization. And it's really neat to look at a couple of years worth of cash flow statements. You can kind of see this story of you growing and catching up with yourself and financing. And so it's something important to learn. So I think at the end of the day, learn how to read your balance sheet, your income statement, your cash flow statement. One, the banks will be happy that you've done that. And two, it gives you a little more confidence in the financial situation and being able to understand what's been happening to your business so you can make changes appropriately going forward. Hope that helps. Have yourself a great day. Bye.